All right, all right. Today we're going to look at SPX, which is the S&P 500 index, because the SPY ETF does have a dividend, which stops the price action from showing the true moves that the index is making. And then today in the index, we made a brand new all-time high. So one thing I want to talk about is if you go back to when I was talking about this bear trap, how the bears were getting tricked and trapped, everybody down here was extremely bearish. If you remember back, it was hellfire and brimstone. The world was going to end. The market had already reached a top and we were going back into a bear market. People were talking about the bond market and yields and yada, yada, yada. You can go through so many narratives of what was talking about. And if you go watch my 2025 Outlook video, I told you the bears were going to say this. I told you the bears were going to try to scare you. And I told you the bears were going to get tricked and trapped. And here we are at a brand new all-time high. Now, I will argue that nothing has changed in the time that SPY was about to crash down and we were going into a bear market to right now where we are at a brand new all-time high. The only thing that has changed is the price that you can see on the chart. We already knew who the president was going to be. We already knew the state of the economy, and we already knew that earnings were going to be just fine. So nothing new was learned from the chart. The only thing that changed is people's sentiment. So be very careful when you're listening to people trying to make predictions. The best way to trade is objectively with best risk reward, best probability, and following the chart and price action. And I will remind you this all year long that you are going to have to block out a ton of noise. There is going to be so much noise in 2025 that if you are trading based on sentiment and what people are saying and what news articles are coming out and what people are tweeting and what people are posting on social media and all of this other crap, you are going to get absolutely ran over this year and you are going to be destroyed in the market, because that will whipsaw you all around. There will be tons of people telling you the market is too risky, it's too high, it's a bubble, it's going to crash. Or even if the market's going higher, they're going to tell you it's going to keep going even higher and you need to buy at the exact highs right before a huge pullback or a correction, and you are going to be chewed up and spit out by the market. You need to have a trade plan that is objective, that knows where your entries and exits are based on risk reward, and then you need to have the discipline to follow your plan and make adjustments only when the chart tells you to or only as required. So in a long-winded way, what I'm trying to tell you is you need to learn how to trade the correct way, not based on news or just how you're feeling that day. And right now, with SPX sitting out here at all-time highs, it is very likely that the sentiment of all of these people that were getting bearish is starting to shift. They're starting to think, hey, maybe things aren't that bad and maybe we should be buying up here, and then the market is going to punish them immediately, and that's when we're going to get a pullback. So I don't know the exact date we'll get that pullback, but I do believe we are getting closer and closer to it now that sentiment is starting to shift back to bullish. And there's a ton of subjects that we'll likely cover in the future when the time comes, but right now you just need to focus on being disciplined and focusing on understanding that the majority of people that trade the market lose money, they act on emotion, and they don't have a plan, or they bail on their plan right before it really starts to get working. So jumping over to SPY, you can see we are right here at the previous all-time high, testing it as the breakout, and then the price target that will likely squeeze the bears to is just a bit higher at 616. And all of the risk is to the downside at gap fills at 603, the bull breakout at 598, and then another gap at 594. Remember, we could go straight higher and then fill these gaps at a later date, and that is still the risk you need to manage to as a bull, or we could pull back immediately and test support and then continue higher, and again, that is still risk you need to manage as a bull. If you are in that longer term swing that we loaded up down here right around 584, then you are already in a zero risk swing trade, and whatever volatility happens in this range does not matter. You simply just need to wait. That's why I teach you to trade shares and not options. You have all the time in the world to just sit on your shares in a zero risk position if you took my suggestion at that low risk entry. So you remember, lots of trading does require patience, it does require discipline, and the patience and discipline is always going to be based around some critical levels on the chart. So those critical levels will be the previous all-time high right around 608, the gap fill at 603, and then the breakout level at 598, and then the gap at 594. Your trade plan should know exactly what you're going to do at every single one of these levels, and the new all-time high price target will be up there at 616. If you have a plan and you're ready to act and you know your risk and reward and which direction you want to trade in, You are prepared, and all you need to do is simply react to that plan when the price tells you to. If you are trying to short, just keep in mind that shorting a bull market is the hardest trade you can make. You are much better off going to cash and looking for opportunities to buy the dip at support. And that is simply just a probability thing. The odds favor in a bull market that you go higher, which is higher lows and higher highs. So obviously the short trade is going to be the most difficult, or you have to get in and get out of it very quickly, which is more of a day trader's mentality. So that is the message I want to deliver to you tonight. All you need to do is know what you're doing at these critical levels, and we'll look at the triple Qs real quick as well. The critical levels here will be the breakout at 530, the previous all-time high at 538, and the brand new all-time high at 546. To the downside, we have a gap at 526, a breakout at 524, and then a support zone right down here at 516. If we can't hold all of that support, that is a huge red flag that we're likely going down towards 510. So know what you're going to do, have a trade plan. If you don't have a trade plan, stop trading and go make one. And then once you have a trade plan, make sure you are actually being disciplined and patient and executing to it. Remember, if your trade plan is not working, at least you can go back to your plan and figure out what you're doing wrong and revise it. If you are simply trading off news articles or emotions, you are just going to get chewed up and spit out, and you're not going to see any profitability this year. So get disciplined now, understand you have to put in that work, and then once you have the trade plan, all you need to do is simply react to it. If you want to come trade with me and get the exact percent allocations that I am trading for the TQQQ or the SQQQ, you can access that service via TSC Trade Alerts, and you can find out how to join my Trade Alert service by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.